What's up everyone? Welcome back to my channel. Welcome back to a brand new video, guys. I hope you all had a great weekend. I hope you already started smashing some profits for this week. So today I decided to bring you a Forex related video on how to determine where to place your stop loss and take profit, because recently I got a lot of private messages regarding this topic and I was like, okay, actually I never did a video about this. So let's just do a video about it because it's actually a very important topic that is mostly very neglected, because most people only focus on the strategy. They don't focus on, oh, where should I place my stop loss? Is it okay if I place it here? What should I do to determine my stop loss? Then what should I do to determine my take profit? All these things are neglected, and it's a very big part of being a consistent trader and making consistent profits. So this is very important to take into consideration. So if you like what I'm talking about, make sure you're sticking till the end of the video to get the most value out of this video. So yeah, before I start the video, guys, make sure you are subscribed to the channel and turn the notification bell on if you like the content that you see. Like this, you won't miss any future uploads. If you enjoyed the video, make sure to drop a like and also feel free to share the video. If you have any questions, make sure to drop them in the comment section. I will make sure to reply to every single one of you. Those that want to learn the strategies I use, make sure to DM me privately on Telegram. You can also join my free signal group by clicking the link down in my video description. You can also check out my website and IG. Both links are in the video description as well. Okay, so now let's just jump straight into the video. I'm just going to use this AUD/USD chart on the M15 for today's video, only for the examples. And now, let me tell you guys. So there's two ways you can place your stop loss and take profits. Okay, so if you're trading price action, you need to place your stop loss and take profit accordingly to the price action. That means you need to watch the market structure and then determine where you place your stop loss and take profit. But if you have a indicator-based strategy, as the one that I presented to you guys last video with the stochastic and the 200 EMA, where we always set um, our uh, our stop loss below the previous structure or above the previous structure if it's a sell, and the take profit, as you guys know, we were always aiming for a 1 to 2 or a 1 to 3. So if you have a indicator based strategy, then you can just use a fixed stop loss and a fixed take profit, meaning that you just place your stop loss above the zone and then you aim for a 1 to 2, not looking for the next structure to hit as the take profit, because you are trading with a fixed system, with a fixed stop loss that you want to use, and a fixed 1 to 2 or 1 to 3 risk to reward ratio. So that's why you don't need to look at market structure. Okay, so this is the first way you can place your stop loss and take profit by using a indicator based strategy. But now let's say you are using price action, you don't use any indicators, you are using market structure, and you want to know how to place the stop loss and how to place the take profit. Where should I place the take profit and where should I place my stop loss? Okay guys, so let's say we see this down move here, and then let's say we see this candle right here. Let's say we are around here. Okay, so I'm just using this example just for the sake of it, because I just clicked a random chart and it was AUD/USD. So let's say we are here, right? So we know we have a support area right here. We know that we have this support area right here, and we see that price came and didn't break through it with a full candle, creating a slightly doji. So if you would be aggressive, you could enter a buy here and be like, okay, I'm trading price action, I need to take into consideration the zones before I place my stop loss and take profit. So your take profit would probably be below this week. Let's say you give it a bit of breathing room like this, And then your take profit, you're not focusing on a certain risk reward ratio. You're just focusing on the next zones. You'll be like, okay, I'm on the M15. What do I do? Do I aim for the fences and swing for and aim for the, I don't know, for the daily high or the H4 high, which is a 1 to 18 risk to reward? Of course, you can do that, but the probability for this trade to run this far is low. Okay, so if you want to be more conservative and day trade, you would place your take profit right at this resistance zone. Okay, so you would see that there's a resistance zone around this area. Okay, right here you would see this resistance zone, and you would be like, okay, I am happy to take my profits around here. Okay, this is a 1.2.4 risk to reward, but as I said, it's not an indicator based strategy. Now you only focus on price action and you place your stop loss and take profit based on price action. And now let's see. Okay, so your take profit would have been hit, but as I said, as you see, guys, the 1.18 risk to reward is far away from being hit. Okay, but this was your take profit. It was hit. Price then decided to break through this resistance zone, and then what you could do, yes, you could wait for a retest, wait for a candlestick confirmation, and we got one here. And then let's check this example as well. Let me use the bar replay again. So let's say you're here, okay, in the market, you see price dropping towards the zone that it was broken, and then wait, sorry, and then you see this doji pin barish hanging man type of candle, and you would be like, okay, I'm happy to enter a buy here. You would place your stop loss below this zone right here, giving it a bit of breathing room, and then your take profit would be what? This resistance zone, because this is the next resistance zone that has to go if the price decides to be bullish. Okay, again, you're day trading on the M15. You don't need to swing for the fences and aim for a 1 to 100 risk to reward. You're just day trading. And as you can see, this is a nice 1 to 6 risk to reward almost. So let's see how it goes. The trade is still running. Okay, currently it's around 1 to 3 in profit. You can now decide to move your stop loss at break even. So yeah, this is the method you can use if you trade price action, because I know a lot of you that trade price action and not a indicator based strategy. If you trade a indicator based strategy, then that's really easy. You just follow the rules that you set. That you, let's say you aim for a 1 to 2, you aim for a 1 to 2 every single trade, no matter what, no matter the structure. You aim for that certain risk to reward, even though price might go 5R. You secure your 2R and you move on, because that's the system you use. You just stick to it, and it's very simple. But if you trade price action, it's a little bit more different, and the risk to reward ratios will be different each trade. Okay, it's not going to be the same. So that's why it's important to use a risk management plan. And by that, I mean to have a certain percentage you want to risk per trade set in your mind and stick to that. Because I know a lot of people that want to buy here, and then they place the stop loss based on their lot size. They be like, okay, I want to trade with a one standard lot. So my stop loss should be very tight because I'm trading with a one standard lot. I want to risk only this amount per trade. So my stop loss should be very tight, okay? And then guess what? You get stopped out. So the first thing you should do, you should decide, okay, I want to enter here. Okay, I want to enter a buy right here. I want to place my stop loss. Then you don't decide what lot size you use, because this is a very big mistake that a lot of new traders especially do. Then what you want to do is you want to determine your stop loss based off market structure. Okay, the stop loss would be, let's say, below this zone right here. And after you determined your stop loss, then you determine what lot size you need to use to risk only that certain amount of percentage if price hits the stop loss. Okay, so let's say 4172, let's put a 20 pip stop loss. Okay, so that would be around here. Yeah, that would be around here more or less. Okay, so with a 20 pip stop loss, okay, let's say you want to risk only $400 because you have a 40K account, and $400 is 1% of that account. So you want to risk 1% per trade, okay? So you determine where you want to place your stop loss. You want to give it a bit of breathing room. You want to place it here, 20 pips from your entry. And then you decide what lot size you need to use in order to risk $400, okay, on this trade, okay? So that would be a 2 standard lot to risk $400 if the stop loss gets hit. And then for the take profit, you aim for the previous resistance zone, which was here. And that's it, you know, that's how you can determine your stop loss and take profit. But I must say that again, it is very, very important to place your stop loss first and then determine what lot size you need to use to risk only that certain amount of percentage on that trade, okay? So this is very important. I see a lot of traders doing it the other way, and that's why they cannot find consistency no matter what strategy they use. So yeah, this is how you guys should determine your stop loss and take profit. If you have any more questions regarding this topic, make sure to drop them in the comment section. I will take my time and reply to every single one of you. So yeah, this is pretty much it for today's video. As I said, guys, make sure to check out the links in my video description if you're interested in any of these. And I will see you in the next video. Goodbye.